The biggest headlines, the voices, the moments driving SFR BTR forward. Give us less than 10 minutes. We'll take you inside SFR BTR, your new weekly must-have habit. Wrap up your week inside SFR BTR. New episodes drop every Friday on Everezi Media and wherever you get your podcasts.
This is Inside SFR BTR for Friday, February 6, 2026. I'm Gregory Frank along with Ryan Saturday. This week's show is sponsored by RENU Property Management. Everezi Media, honoring Black History Month. Coming up, all eyes on BTR with an exemption pending. John Burns, Jacque Petroulakis, and Richard Ross share their insights. Are you leaving 20% of your NOI on the table? On Inside the Vendor Network, Yovonne Kenny sits down with RENU President Ryan Killian to show you how centralized operations can unlock hidden profit. Fewer buyers, sharper strategy, tighter pricing, and smarter deals. That is what today's SFR BTR acquisition market really looks like on Unleashed with Ted and Adam. We've got a great show for you today. Let's get started.
I think build-rent homes are a massive opportunity. I mean, if you look at the single-family rental market in the country, there's 14 million rental homes. Way back in 2006, there was 11 million. So even before all of this, there was a lot. And we weren't building anything new for rent. Yet there's about twice as many apartments out there. We're building 400,000 brand new apartments every single year. Just using the simple math here, we should be building about 150,000 new rental homes every year just to provide those who want something new and can pay a little extra for it and to get more supply into the market an opportunity to rent something new. It's that simple. And I think capital sees that, and there is a long tailwind here for building new rental communities.
That is the middle ground. For the last 50 years, about a third of the country have been renters. That hasn't changed. What's changed is now there's a huge affordability difference. We build purpose-built rental communities, 3 and 4 bedroom homes, fenced backyard, 2-car garage. We rent those homes for about, depending on the market, depending on the location, somewhere between 40 and 50% less on a monthly basis than owning the same home. And that's because of down payment, that's because of interest rates, that's because of the price of the home, insurance, taxes, all those things that go into the monthly cost of a home. So if you're talking affordability, purpose-built rental communities are an option that helps achieve that middle ground between living in an apartment, which is the typical progress, right? People get out of college or get out of school, they partner up, they live in an apartment, they have a child or maybe not, then they move into a home, and that's been the traditional path. What purpose-built rental communities offer is the middle ground. They can leave the apartment, and this happened in COVID, in the pandemic, in waves, leave the apartment, live in a single family home, whether it's a cottage style home like Jacque builds or a 3 or 4 bedroom home like we build and operate. And then maybe in 5 years, they want to buy a home. A third of our residents tell us they don't ever want to buy a home. They love the flexibility of being able to move from Charlotte to Atlanta to Dallas. And when you own a home, it's obviously not as portable. So there are a lot of renters by choice.
Housing needs are diverse.
It also complements empty nesters. It complements retirees. So it really provides for the full cycle.
A third of our residents are 55 plus, and our results are similar to yours in that 50% of our residents say they either don't ever want to buy or they're not looking to buy for 5 to 7 years from now. That's really, really significant. And it does expand that housing by choice sentiment, but I think it also points to policies built on the assumption that everyone wants or is able to buy a home might be a little misguided. Housing needs are diverse, and we need to continue to offer a full range of options to consumers, and we have to align with the municipal goals by delivering new rental supply without competing with homeownership.
Let's dive into First Key and AMH and what you learned there.
The biggest thing I learned is scale doesn't create the problem, that scale exposes the problem. They taught me that these little cracks in the process are very little at 10 homes you're buying a month. But when you're buying 1,000 in a month, those cracks are the Grand Canyon.
Our guest is Ryan Killian, president of RENU Management, a fully centralized operations platform purpose-built for institutional SFR and BTR portfolios.
Is it clear what you're supposed to do? If it's not clear, you can't be expected to actually accomplish a task. Those little things have shaped the way I have led teams. It taught me a lot about being uncomfortable, continuing to push in and lean into problems that maybe some others are running in the other direction. Those that stand out are the ones that will go right to that problem, like the buffalo through the storm. Don't run around, don't run backwards, go straight through it, and you'll be through that storm faster than if you ran backwards.
Best advice you've ever received?
I'm going to give you 2. Early mentor told me to listen more. Another one, when you are building this out,
I want you to build a system that is so good that even
I kind of noted the ocean of capital that was available in this space in years past has kind of dried up. Can't throw a rock anymore and hit 4 buyers, but there are certainly pockets out there where if you know people's strategy and where they raise their capital, there's like a smaller market of buyers, but those buyers actually align with opportunities a lot better.
When we have conversations with sellers, the sellers are focused on market value and the buyers are focused on cap rate. Cap rate pricing's coming in typically at the highest, like 10 to 15% discount. A 10% discount is kind of like the threshold where a seller oftentimes is like, I'm not going to go below that.
The further back you go away from actual cash flow, the more the risk is to the buyer. Taking on development risk, taking on building risk, taking on lease-up risk, taking on a lot of market risk. I heard of the biggest firms in the market, it actually hired people to manage their bulk acquisition strategy. So I think bulk acquisitions might be making a return. I don't know how big or how fast and furiously, but
our book historically has been kind of 70% fix and flip ground up construction, and it still continues to be that way. But the change has really been over the last year, where a year ago, 25% of those fix and flip ground up construction folks were exiting into a DSCR loan. Fast forward to today, it's closer to 50% are exiting to a DSCR loan. And I think it has to do with multiple factors. One, are they able to sell it for the price that they want to get? Maybe not. And then two, our rates still are historically really good on the DSCR side. And because we are so much cheaper than the rest of our competitors on the DSCR side, we're seeing us take more of that lion's share of that business.
The biggest headlines, the voices, the moments driving SFR BTR forward. Give us less than 10 minutes. We'll take you inside SFR BTR, your new weekly must-have habit. Wrap up your week inside SFR BTR. New episodes drop every Friday on Everresi Media and wherever you get your podcasts.